All right, everyone. Marco Palmero, founder of Ulysses in Dubai. In this video, we're going to be talking about a very hot topic and also a complex topic, which is what are the returns of small business acquisitions? What is the ROI, that you can get out of small business acquisitions? I think this is a very important topic to discuss because I see individual and private investors making mistakes, especially if they're diving into small business acquisitions for the first time. And I want to share my thoughts openly about ROI and also explain why I don't believe is the right way to look at small business acquisitions. Of course, many big businesses don't look at acquisitions in that way, and that's why I'm All right, everyone, Marco Palmero, founder of Ulysses in Dubai. In this video, I'm going to share with you some thoughts around the topic of ROI. All right, everyone, Marco Palmero, founder of Ulysses in Dubai. In this video, I'm going to discuss with you what are the return on investment for small business acquisitions. It's a very hot topic and a question I've been asked by some people, especially individuals and private investors when we work on the advisory side for Ulysses and we're not focused on our own acquisitions. And the reason why I want to record this video is to kind of share my open thoughts around ROI, explain why I don't believe is the right metric for you to use in evaluating small business investments, and some examples of why I believe this is the wrong way to look at things. Now, ROI is a figure that a lot of people use to evaluate investments, right? Very popular in real estate, for example, and they use it to compare opportunities, right? See which one might be the best for them. Now, the problem of ROI is that it doesn't account for a lot of variables. And when talking about small business acquisitions, for example, I'm thinking about time, leverage, and other factors. That creates huge problems because it might cause you to pick an opportunity based on a figure that is not actually reliable, that might change over time. And so ROI, from my perspective, is a figure that is flawed, at least for small business acquisitions. And I would advise people to not use it. And personally, I don't use it. Our company, Ulysses, doesn't use it. I've seen and dealt with businesses that generate more than $400-500 million a year, and they don't use ROI as a metric for valuing a potential acquisition opportunity. But again, if you really want to dive deeper into the ROI concept and talk a little bit more about how you can calculate that, ROI is substantially a reverse of the multiple that you're paying when it comes to small business acquisitions. So let me give you an example. Let's say that you're buying a company that is generating 1 million in EBITDA a year, and you're paying 4 times multiple for that. So it's 1 million times 4 million in total purchase price. Now ROI is going to be 1 million, the EBITDA of the business, divided by the total purchase price, so 4 million. 1 million divided by 4 gives you 25% ROI. Now, I've seen many businesses, small businesses, that generate anything between 15 and 50% ROI if you go ahead and calculate that. Now, I never rely on that figure, to be frank with you, because I believe and I strongly feel it's the wrong way to look at small business acquisitions. And it doesn't give you the full perception of what the opportunity is all about and which opportunity is the best one. It's totally wrong from my perspective. I don't use it. If you want to use it, go ahead and do it. Then tell me, how did that go? But my point is, there are many other ways to evaluate small business acquisitions in a better way. I'm going to share other videos around this topic. The point is, ROI is a flaw, at least for small businesses. If you really want to use it, go back, buy real estate. I'm not going to argue against it, but for small business acquisitions, there are better ways to evaluate businesses. With all that being said, again, the ROI is quite relevant for small business acquisitions, quite sizable for that matter. And The reason is small business acquisitions do have some risk involved. Of course, you can mitigate that risk in a lot of different ways. And when we look at our own acquisitions for Ulysses, we make sure we mitigate all these risks. And I'm, of course, going to record more videos on that too. But getting back to the ROI concept, return on investment, what are the returns? Again, I've seen between 15 and 50. But again, I wouldn't rely on these figures if I were you. You take this information, you use it as you want. This is not financial advice in any way. So